tryna take it down, place for you just scoring minds, best the bar.
All right, ladies and gentlemen, I got your watch list coming into January 30th, 2020, and the stock market could test new lows. So we are wrapping up the first month of the year, and we have important stuff going on. Even after hours, you see the market coming down. We had big earnings stuff. We had more updates with the coronavirus and everything going on with that and that effect, and even some of the travel stocks and other plays we've made previously. But the main event happened today. It was Jerome Powell. The Fed chose not to raise interest rates, and then he had the press conference and gave pretty much guidance for the Federal Reserve and what we should expect with monetary policy. And we've clearly seen over the last few months that is what the stock market has reacted to. You guys have probably heard the repo from the feds and what that means. And again, why is the stock market just going straight up? That was part and part with that policy, and we got a little bit more clarity today, and that's going to set us up for something. So I want to talk about that, but the real reason with, again, some of the earnings, we saw Facebook had an awful drop, but not too bad of an earnings, but it does signal stuff for some growth. We saw Microsoft kill it. They're reaching all-time highs, great conference call and everything. And then now Tesla, oh my gosh. Woo, I know you guys like that, but we got a lot of things to talk about. I have a few keys for you to look at. I want to go over the plays we made today, and then I also want to talk about the stocks we want to be watching tomorrow, and then even talk about how we could plan for this next week and even now this next month into February, and also both the buying opportunities, whether it be puts or even long-term stocks, and really what we could be looking forward to. So let's get right into it. Make sure you guys drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning and throughout the day. We're streaming all of this live, all of the plays, all the different strategies. Again, we went over some cool plays that we'll go over, but any news events, we're streaming the World Health Organization. We're going to get an update from them, and there's also now even updates going on with China and the U.S. going there. But with everything going on with earnings, it costs you nothing. We should see you there. If you can't be there, you watch this watch list, and if you can't do that, you want to stay in the loop, you got your stream alerts. So we better see you there. And then the most important thing you need to do, post your watch list below. Let us know what you're looking at. Got any plays, earnings plays, comments, anything there that could be helpful and source information. Again, for the live stream and even in the comments, all we ask is that you're positive and respectful. So please don't be shy. Speak up, baby. But let's get right into it. I did not write down the keys for you, but I really want to just talk about what could make the market test lows or test new lows. One, it is the effect of what we saw with Jerome Powell. It had an effect, and I will go over pretty much a summary of what happened with the Fed meeting, but mainly now the market reacted somewhat negative to the assumptions, but you're seeing we are still in that Wuhan zone. So again, we gapped up today. We came down, but came right back up literally to where we closed. This is, again, especially with the low volume and the Fed activity, it's no coincidence you're seeing it at these prices, but now we fell back there. Now we're at the level that we broke up from, right in the middle. Pretty much this is what I'm saying with ride the wave. We might test the low tomorrow on Thursday, then it could bounce up Friday or vice versa. We bounce up tomorrow, then it starts selling off Thursday, but this is part of riding the wave. But now we're also seeing with the Fed out of the way, and now with even companies like Microsoft having good earnings, even Tesla having such a big earnings, but mainly Microsoft, you're seeing the impact that these earnings are having on the market, namely even to Apple. Apple is hitting 52-week highs today. They did great. Again, the two largest companies are killing it right now, but you're still seeing a lack of stability in the market. So that's telling us something. So although I think the market could be testing new lows, like I said, we might see that bounce till Friday. I could even give it another week, but now also we had the Fed today, and there's going to be a digestion period off that. And again, these weren't even the biggest earnings so far in the earnings season. You are going to get a week here. We still haven't had the week with like 500 to 1,000 companies that report, so it could still have an impact. So now you're seeing the good stocks are holding up, but that's not enough to really fight back. Granted, though, we are still at market highs. It's just kind of now the stability of here, and now especially now again with what this virus could do. But the fact that we're seeing now progressive partial travel bans from China, that's showing the effect there. And now the coronavirus has reached 7,700 cases. So it's almost as many people that were infected with SARS, but SARS killed 800. The death toll only is around like 136, I believe, right now. But you now have officials in the United States going. You would think that would be a positive effect on the markets. But again, there was a few things even after hours. Apple's still up. They had to pay like they got a $850 million fine for a patent thing. So did Facebook. Those are bad earnings. But for the most part, you're going to see now the Fed, the market digests the Fed as well as the coronavirus. And now pretty much what I'm saying is all what is going to be contributing either lows or highs here, but mainly down to the lows. It's going to be more escalation with the coronavirus, and now also the scope to which the market digests the Fed and how they feel about some of the comments Powell said. But as far as the coronavirus now, it is going to happen slow. So even though I'm saying testing lows, I don't think it's going to happen anywhere. I am keeping watch for this week. It's going to be important, but next week will be just as important now because we are getting a velocity indicator is what we could call it. We're pretty much gauging the speed. We're pacing the market and seeing how long it takes to respond to some of this stuff, what it's responding to and how much, and how, again, this is the speed of the wave and the cycle. So keep that in mind and don't get fooled by, one thing. That's why even playing with time on the options trading is going to be so important. But what's causing that speed and and everything is that it's how the official cases are getting reported, but more so now, the difference between global cases and then cases in America. So the cases in America and new cases, that hasn't gone up, has gone up in places like Germany, but it keeps exponentially rising in China. So understand the difference there and see how what could make the market kind of push back and forth. That's why it maybe could be bouncing a little bit, but it didn't bounce all the way, and it's at this precarious spot. And that's why there's stuff like the travel bans. And as these numbers come out and we'll see the U.S. and what's going to happen, we're going to get two different meetings from health organizations tomorrow, both in China and the World Health Organization. So we will see. But all of this combined, and now if we see either bad earnings in the big weeks, or now if some of these companies that had good earnings reverse, that is going to be the kicker. So those are your keys. That's what we got to keep an eye on for. But again, coming into tomorrow and the end of the week, that's going to be one important area to watch. But again, that first week of February is also going to be very, very important too. So I hope you guys are ready. But let us get into the plays. So there's a few plays. We didn't play the Tesla. That one's going to be a good play, but I still didn't like it. Again, even on like the 620s, your break even was about $18. It was like $6.30. So you don't, now those guys pretty much made 100%. This is going to be a good one to frog for Thursday and Friday, or maybe even selling credit spreads, whether it's selling put spreads if it continues up in the morning, or selling credit spreads if you think it's going to be high. So I'm going to keep my eye on that. But we did make a play on Facebook today. We did grab, we grabbed 3 different sets. I got YOLOs for like $18 on February as the calls. Those missed out. We got 250 calls for February 14th. I got 5 of them, spent like $185, and then we spent the same amount on puts on 195s, but we have those till 2 weeks from now. So those are going to be good, and depending on how the market reacts, Facebook could be a good continuation. The thing that dropped them was really that the U.S. subscribers and Canadian daily active users, that wasn't increasing as much. And again, that's just going to change how people factor in the growth of Facebook, or the premium you're paying on growth for Facebook. Again, I've said this even for the last year and a half, Facebook is slowly transitioning to a value stock, or holding more stability, believe it or not. They did increase their buybacks, so we'll see with that. But that could be a potentially good continuation, or now even a bounce. Again, you guys saw what happened with Netflix and how that was kind of all over the place. So there's that. Then there's going to be Microsoft. We have that 177. It sucks. We're going to have 2 days left on that. That one I'm probably going to ghetto spread in the morning. We bought that 2 or 3 weeks ago for $20, so that should be up a decent amount. But then we also played our XLNX today. They were only up $1,700. I was expecting like $3,000 on that, but they weren't. But I'm still holding on to them. I even added 2 different XLNXs today to play the continuation, and it did what we wanted. It opened up at 91. I got the plays pretty early. It kept dropping. It continued. It bounced throughout the day. And then, some people thought it would come up here. And then it did the classic continuation move, dropped, and ended up hitting the low here and closing down about 10%. So we're right at the money. We have till next week. I'm going to hold those, and I even added more. I added both another weekly and the one for next week. But take a look at VFC here. This is pretty much the continuation that we're looking for. They had their drop. They gapped down. They opened up from where they dropped, came up, bounced up a little bit, and then they sold off. You see they bounced up again, then they continued to sell off there too. It looks almost exactly like XLNX here. Again, you'll see it after a few days here, and that's what the after hours turned on. Maybe I should turn the after hours on. You can see now it looks very, very similar. So I'm waiting for those continuation moves, and that's why I'm holding it there. But be careful, be diligent with your profits. You like the amount, take it. But the other XLNX plays that we made today, I grabbed them in the morning. They're up about 50%. I grabbed one January 31st. A weekly expires tomorrow. I spent $38 on that. It's an 87 put. My logic was even this morning, I was like, well, we could get the XLNX pretty much $1 lower than the strike I bought, but at the same price. We're just sacrificing the time. So I said if it did continue and it was going to go to 88, that would be a good one. And my plan was if I'm holding this play too, it would free me up to sell the other positions and then get one that could, still give me value but have a lower cost basis if they did continue. And then I got 3 February 14th, so I spent $66 total for the $80 put. So that was an extra week because we still have that Robinhood one. That play, I think that play like doubled or tripled there. It's still holding, but still going to be holding those. Those were the plays we made today. And then besides Facebook, and then the final play we made today was ServiceNow. So I got an Iron Condor on this. A lot of you guys, we have a video on it. You could just search the trading fraternity Iron Condor. But what an Iron Condor is essentially, you're selling 2 credit spreads hoping the stock ends up in the middle. So you pretty much set a low limit and a high limit on the stock. And if the stock falls anywhere between there by the time the contracts expire, those contracts expire, you keep the difference, you win. If they fall outside of the contract, you lose. So again, you could do these on Robinhood. As you see, it shows up as an Iron Condor all in one. You would just do a 4 option order. And again, we have a tutorial on this, but this is the play here. I did 4 of them. In this play now, you see I have $800 in credit. Oh, that's crazy. I thought it was supposed to be $1,000 max. I thought I had 5 instead of 4. So it's $800 max risk and then a $200 risk itself. What this play was, though, we sold 4 of the 320 calls. We shorted those 320 calls and then bought 4 of the 322.50 calls. And then we shorted 4 of the 310 puts and then bought 4 of the 307.50 puts. So again, 2 credit spreads at the same time. Pretty much the bet that we made was, or where we win, it's taking your break even. So we got 201. I thought I got 204 on them because the 4 I calculated it wrong, but I pretty much got $201 of credit. We're risking $50 for each one. So $200 risk, you got times that by 4, you got 804 in credit. But now, so you pretty much add 201 to the first strike that you sold 320. So it's at what, 322.01 essentially. That is our max to the top end, and then on the bottom it's like 308 on the bottom. So essentially now if ServiceNow stays above 308 and below 322 by the end of this week, all of these contracts would expire and we would keep the credit. Or if it falls outside, like now it's above 333, what's going to happen with that? If it ends up closing there by Friday, we would lose on there and we would just pretty much lose the difference. Average credit's 201, the max collateral is 250. We would lose pretty much $49 per contract. So you lose about $200. So this one, it might even be up tomorrow. We're going to see on there. But again, my logic with ServiceNow, I told you guys, it's not a big mover, even get time on them. And I did actually ended up playing a strangle on it too. We got like a 365 call and a 260 put. I spent about less than $100 both ways. And I got like February 21st, which was good. It gave us time. So even with this Iron Condor, we could actually still win on both sides if you think about it. Those calls might go up. The puts we bought for $50, $60, those will expire. But now, let's say it shoots up. And again, this is what I said with ServiceNow. It's a really weird mover after earnings, and it could get in stuff and have weird continuation. So if it does have a continuation upwards, we'll benefit off the calls we bought. But pretty much in the next 2 days, if it just drops to that 322, those contracts will expire. So if we are able to take the 1,000 from there, and then we'll still have the contracts for next week, and then it takes us a long time to continue, we'll be able to profit both sides. But that was pretty much the plays we did today. Now looking into tomorrow's going to be exciting, but even more so what we set up tomorrow coming into Friday. I think both tomorrow and Friday have the potential to be very, very big. So again, we need endurance, and you guys got to take advantage of these opportunities. And I think the opportunities are really going to start picking up in pace here as we start. Again, we're still in that Wuhan zone. You're getting the earnings. You're going to get post-earnings continuations. The market's going to start getting warmed up to earnings. Again, it's just began, my friends. So watch Boeing. They had earnings today. They were really bad, and people were expecting them to go down, but they came up. But again, just like the market, watch out for them to continue. This could even be a good one for credit spreads on this week, but I'm going to watch them. Watch Intel now and watch the other chip makers given the AMD earnings we saw. But now with Microsoft, we want to see how that responds. And again, Intel had those good earnings prior. Watch Apple. I want to see how that responds with everything, even that lawsuit tomorrow and what happened with Microsoft. Watch Snapchat. This one could even set us a good long-term buy. I want to talk about them. And then also Abivai, but they dropped on the Facebook stuff. It makes sense. They're kind of in the same space, but this could have hopefully offered us a discount. You know, they were down a lot more as Facebook was dropping, but it's almost February. We're going to make another deposit. I may consider getting more shares before the earnings. I'm still undecided. May just want to sell premium if anything, but then watch Abivai. This is one now where it's getting kind of down to that support level. You had some of the healthcare earnings. It might level out around here. If it doesn't, you're going to get real max pain around the 70s, but I think we might get some stability here. And now, it's came down a little faster, but get ready to watch Abivai as well, too. Then watch United Airlines. Remember, we got those plays. Those plays actually still performed for us. Remember, that's why we got time. They went all over the place. They went up in value and lost value. They were even up 15% today. Now they're down 2%. But as you can see, after hours, they're ending at a low. They're going to keep going down. We still have time. And as these fears pick up, that is not going to help. But you see there, too, and the different ways to play some of these now, even though it's had a big drop. The methods you go about in the exact contracts, that's going to change how you're going to profit on these. But watch the travel industry and any of those type stocks. Then still watch AMD again for the continuation. They dropped surprisingly a lot today, and we still have that other play from last time yesterday, and we're down on. But we still have those NVIDIAs. Those held up through the storm. I'm pretty impressed with those, and I like NVIDIA. Now we can prepare for their earnings, but their earnings is actually late February, middle of February, so there's still a little time. But watch how they even respond with the Microsoft news and all that. Then finally, McDonald's. I thought they had earnings today. I think it might be tomorrow morning. I'm unsure. I think it will be tomorrow morning. I thought, but I'm pretty sure it was this morning. I didn't double check, but in this name of credit spreads and value growth to momentum, even where they're at, I'm going to keep an eye on for them. I think they're interesting. I did think they have earnings today. Watch also HD now because they didn't move as much. And if we start to see that crisscross in that rotation in and out of HD and McDonald's, you've seen that before. This could be another good one for the credit spreads. And then finally, TLT. They rocketed off of the Fed news. Oh, and I forgot to even explain what the Fed said. But watch TLT with this. With those plays we have are up. They've gone up a lot, surprisingly, again, even in the midst of everything. And if they start breaking out before any of this stuff happens with the SPY or the virus, the bonds could be telling the story. But finally here for the Fed, the main point in what really Jerome Powell said today, I gave it the analogy as a kid moving back home with his parents because he was stressing the nature of the reserves that banks were holding. And he pretty much said the repo issue was caused because as bank reserves fell, it affected the repo market. And if the repo market gets affected, the only reason they're worried about that is because it limits their ability to use the interest rates for whatever purpose they want or for a positive gain. It pretty much limits their power and capability of using the rates as a monetary policy tool. So that's why they said they stepped in with the repos, and pretty much he said the plan is expect until April. They want to taper off the repos till April, and what they pretty much did since September, because he said that is the baseline low of reserves. He said reserves cannot fall below 1.5 trillion. So by implementing these repos and pretty much stabilizing the market, the Fed is trying to attract banks in the natural market to naturally, out of their own market self-interest, hold reserves and stabilize the repo market. That's why they raised the interest on excess reserves and all that. But pretty much going till April, what he was trying to say, and it summed up to, the Fed is going to create a market environment where banks should theoretically be able to save enough money in their reserves and be incentivized to do so, that come April, the reserves will be ample now and there won't be really even a need to do the repos, and then they're going to taper it off. Literally, like I said, it's like moving back with your parents. They're saying you get to live here for 9 months, 10 months. You don't have to pay rent, but save up money so you could buy your own house. But the question is going to be, are the banks going to spend their money on jewels and weed and video games? That's what we'll see. But we'll go over this a lot. Ask any questions on this on stream. Sorry for including that at the end, but I guess that's for the OGs who really pay attention. But that was important. Again, in the last thing he said was that there was trade war concerns that caused the market to go down. And pretty much he said that the market is pricing in good trade news, and the market kind of disagreed instantly. And then he literally said there is still trade concerns. And he also said the coronavirus is something very serious. So I'm sure this is going to come up, even how we watch tomorrow and the banks and everything. And again, how the market digests this is going to get important. So keep your eyes out for that. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. Make sure your head is in the game, baby. We need endurance. Stay alive. Keep the head above water, please. You ain't got the time to doubt, to do this. If you want to do that, you should have just spent all that energy and time just controlling the budget and going little by little. That's it. There's going to be hundreds of earnings reporting. How can you play all of them? Got to catch them all. Pokemon, you got to save it up and budget, balance the books. Careful of the expectations. Let it come to you. Don't force it. Look yourself in the mirror, baby. And you better find that switch and flip it. Let's go!